Right now, we're in greed mode. People are chasing returns like it's a race. They're buying things they don't understand because they're afraid of missing out. That fear of missing out, that's going to cost you everything if you're not careful. I want you to think about something for a second. When you buy a stock, you're buying a piece of a business. You're not buying a lottery ticket. You're not buying a meme. You're buying a business. And the question you need to ask yourself is, do I understand this business? Do I know how it makes money? Do I know who runs it? Do I know what could go wrong? If you can't answer those questions, you have no business owning that stock. And yet I see people every single day buying things they know absolutely nothing about just because the price went up yesterday. This is insanity. This is how you lose your shirt. I've watched people make millions in the market, and I've watched people lose millions. You know what separates the winners from the losers? Discipline, patience, and the ability to say no. Most people can't say no. They see an opportunity or what they think is an opportunity, and they jump in with both feet without thinking about what could go wrong. That's not investing. That's hoping. And hope is not a strategy. Now, you might be sitting there thinking, Kevin, you're just trying to scare me. You're being too negative. And you know what? Good. You should be a little scared. Fear keeps you sharp. Fear keeps you from doing stupid things. The people who aren't scared right now, they're the ones who are going to get crushed when reality comes knocking. And trust me, reality always comes knocking. It might take a month, it might take a year, but it always shows up. And when it does, you better be ready. So what does this all mean for you? It means you need to stop, take a breath, and think. Really think about what you're doing with your money. Are you investing or are you speculating? Are you building wealth for the long term or are you trying to get rich quick? Because if you're trying to get rich quick, let me save you some time. You're going to lose. The market doesn't care about your dreams. It doesn't care about your timeline. It only cares about one thing, reality. And reality is catching up fast. The smart investors, the ones who actually make money over the long haul, they understand something that most people don't. They understand that the best time to buy is when nobody else wants to. They understand that patience is more valuable than speed. And they understand that protecting your capital is just as important as growing it. You can't grow wealth if you keep losing it chasing the latest hot stock. But here's the kicker, and this is what you really need to understand. What's happening in the market right now isn't just about stock prices or corporate earnings. It's about something much bigger, something that affects every single investment you make. And in the next part, I'm going to break down exactly what that is and why it changes everything. Let me tell you what that bigger thing is. It's the system itself, the entire architecture of how money flows, how markets operate, how companies are valued. It's all being tested right now in ways we haven't seen before. And most people have no idea it's even happening. They're so focused on the next trade, the next tip, the next big thing, that they're completely blind to the fact that the ground is shifting underneath their feet. You see, when I started in this business, things were different. Companies had to actually make money to justify their stock price. There were rules, standards, expectations. If you wanted investors to give you their hard-earned cash, you had to show them a path to profitability. You had to demonstrate that you understood business fundamentals. Now we've got companies burning through billions of dollars with no profit in sight, and people are throwing money at them like it's confetti at a parade. This isn't rational. This is madness dressed up as innovation. And here's what really bothers me. The people pushing this narrative, the ones telling you that this time is different, that the old rules don't apply anymore, they're the same people who were saying the exact same thing before every major crash in history. I heard it in the dot-com bubble. I heard it before the financial crisis. And I'm hearing it again right now. They always say it's different this time. It's never different. Human nature doesn't change. Greed and fear, those are constants. And right now, greed is winning. But let's talk about something specific, something concrete that you can actually understand and act on. Interest rates. Now, I know, your eyes are glazing over already because interest rates sound boring. But listen to me. Interest rates are the single most important factor in determining what your stocks are worth. When rates are low, money is cheap, and companies can borrow and spend like crazy. That inflates asset prices. But when rates go up, and they will go up, all of that comes crashing back down to earth. It's gravity. You can't escape it. The problem is we've had artificially low rates for so long that an entire generation of investors has never experienced a real high rate environment. They don't know what it feels like when the cost of money actually matters. They've been spoiled, frankly. They think stocks only go up because that's all they've ever seen. But I've seen the other side. I've seen what happens when the punch bowl gets taken away, and it's not pretty. Companies that looked invincible suddenly can't service their debt. Stock prices that seemed reasonable suddenly look insane, and all those geniuses who thought they had it figured out, they disappear. Now you might be thinking, okay, Kevin, I get it, things are risky, but you still haven't told me what to do, and that's fair. So here's what you do. First, you stop buying garbage. I don't care how exciting the story is. I don't care how many people are talking about it on social media. If the company isn't making money or doesn't have a clear path to making money, you don't touch it. Period. This is non-negotiable. Your job is to protect your capital first, grow it second. Second, you focus on quality. What does quality mean? It means companies with strong balance sheets, companies that generate real cash flow, companies that have been around long enough to prove they can survive tough times. I'm talking about boring companies, utilities, consumer staples, healthcare. These are the businesses that keep making money even when everything else is falling apart. They're not sexy, they're not going to make you rich overnight, but they're also not going to bankrupt you when the market turns. Third, and this is crucial, you keep cash on hand. I know that sounds crazy when inflation is eating away at the value of your dollars, but hear me out. Cash gives you options. Cash gives you the ability to act when opportunities present themselves. And opportunities always present themselves when markets crash. The people who make the most money in investing aren't the ones who are always fully invested. They're the ones who have dry powder ready to deploy when everyone else is panicking and selling at fire sale prices. Think about it this way. If you're 100% invested right now and the market drops 30%, what are you going to do? You're going to sit there and watch your portfolio bleed. But if you've got 20 or 30% in cash, you can go shopping. You can buy incredible companies at incredible prices while everyone else is running for the exits. That's how wealth is built. Not by chasing momentum, but by being ready when the crowd is wrong. Now let's talk about something that nobody wants to discuss, but everybody needs to hear. The role of leadership in all of this. You cannot separate the performance of a company from the quality of the people running it. I've said this a million times on Shark Tank. I don't invest in ideas, I invest in people. Because a great idea with terrible execution is worthless. And right now, we've got a lot of terrible execution being rewarded. Look at some of these companies that have gone public in recent years. The founders have never run a profitable business in their lives. They've never had to make hard decisions about cutting costs or managing cash flow. They've just raised round after round of venture capital and spent it on growth at any cost. And the market has rewarded them for it until it doesn't. And when it doesn't, those companies collapse faster than you can blink because there's no foundation, there's no discipline, there's just hype and hope. This is why experience matters. This is why you need leaders who have been through tough times and know how to navigate them. When I look at a company, I want to see a management team that's been battle tested. I want to see people who have made mistakes and learned from them. I want to see people who understand that running a business isn't about telling a good story to investors. It's about executing day in and day out, making the tough calls and delivering results. And frankly, I'm not seeing enough of that right now. You know what else I'm not seeing? Accountability. We've created a system where failure has no consequences. A CEO can run a company into the ground and they still walk away with millions of dollars. A founder can burn through investor money with nothing to show for it and they just move on to the next thing. There's no skin in the game. And when people don't have skin in the game, they take stupid risks. They gamble with other people's money because they know they won't be the ones paying the price when it all goes wrong. This is what frustrates me more than anything. I've built businesses, I've risked my own capital, I've had sleepless nights wondering if I was going to make payroll. That experience, that fear of failure, it makes you a better business person. It makes you careful. It makes you think twice before you make a big bet. But we've got a whole generation of leaders who have never experienced that fear because money has been too easy for too long. And that's dangerous, not just for them, but for everyone who invests in their companies. So when I tell you to be careful about where you put your money, this is part of what I'm talking about. Don't just look at the numbers on a financial statement. Look at who's running the show. Ask yourself, do I trust these people with my money? Have they proven they can deliver? Are they aligned with shareholders, or are they just lining their own pockets? These are the questions that separate smart investors from suckers. And here's the thing that ties all of this together, the thing that should really make you think twice before you buy another stock. We're not just dealing with normal market risks right now. We're dealing with something that could change the entire game, something that most investors aren't even paying attention to. In the next part, I'm going to reveal what that is and why it could wipe out unprepared investors almost overnight. What I'm talking about is the complete breakdown of the relationship between risk and reward. And I'm not being dramatic here. This is real. For decades, the way the market worked was simple. You took more risk, you got the potential for more reward. You wanted safety, you accepted lower returns. That balance, that fundamental principle of investing, it's been completely destroyed. And when I say destroyed, I mean we're in uncharted territory. Here's what's happened. Central banks around the world have pumped so much money into the system that nobody knows what anything is actually worth anymore. Asset prices have been inflated artificially. The natural price discovery mechanism that makes markets work, it's been broken. And now we're all sitting here trying to figure out what happens when that support gets pulled away. Because it will get pulled away. It has to. You cannot print money forever without consequences. The consequence that everybody's worried about, the one that keeps serious investors up at night, is a reckoning. A moment where the market looks around and says, wait a minute, these prices don't make any sense. And when that moment comes, and I believe it's coming soon, you're going to see a repricing of assets that will make your head spin. Companies that are trading at 50 times earnings will suddenly be trading at 15 times earnings. And if you're holding those stocks, when that happens, you're going to lose a fortune. But here's what makes this even more dangerous. Most people don't even realize they're exposed to this risk. They think because they own index funds, they're diversified and safe. Wrong. When you own an index fund, you own everything in that index, the good and the bad. And right now, those indexes are weighted heavily toward the most overvalued companies in the market. So when those companies fall, your index fund falls with them. You think you're playing it safe, but you're actually taking on massive risk without even knowing it. This is why I keep hammering on the importance of actually understanding what you own. You need to know what's in your portfolio. You need to know what you're exposed to. And you need to have a plan for what you're going to do when things go south. Because they will go south. Markets always do. The only question is when and how bad. And if you're not prepared, if you're just hoping everything will be fine, you're going to be one of the casualties. Let me give you a concrete example of what I'm talking about. Think about the tech sector. For years, tech stocks have been the darlings of the market. Everyone wanted to own them. Everyone thought they were the future. And you know what? Some of them are great companies. But here's the problem. Even great companies can be overpriced. When you're paying 100 times earnings for a company, you're betting that everything goes perfectly for the next decade. No competition, no regulatory problems, no economic downturn, nothing. That's not a bet. That's a prayer. And I don't invest based on prayers. What I do is I look at valuations. I look at what I'm paying relative to what I'm getting. And right now, the math doesn't work for most tech stocks. They're priced for perfection in a world that's anything but perfect. So what do? I wait, I keep my powder dry, I let other people chase those stocks higher. And when reality sets in, when those stocks come back down to earth, that's when I'll consider buying, not before. This brings me to something critical that every investor needs to understand, but most don't. The concept of opportunity cost. Every dollar you invest in one thing is a dollar you can't invest in something else. So when you buy an overpriced stock, you're not just taking on the risk of that stock going down, you're also missing out on better opportunities that might come along. And in a market like this, where everything is expensive, the opportunity cost of being fully invested is enormous. Think about it. If you put all your money into stocks today and the market drops 20 or 30% over the next year, you've not only lost money on what you bought, you've also missed the chance to buy those same stocks at much better prices. That's a double whammy. You lose on the way down and you lose the opportunity to profit on the way back up. This is why cash is so important. Cash is optionality. Cash is freedom. Cash lets you be opportunistic instead of desperate. Now, I want to talk about something that doesn't get discussed enough, the psychological side of investing, because here's the truth. Most people lose money in the market not because they're stupid, but because they can't control their emotions. They get scared when stocks go down and they sell at the worst possible time. They get greedy when stocks go up and they buy at the worst possible time. It's a cycle of poor decision making driven entirely by emotion. And right now we're in the greed phase. People see stocks going up and they don't want to miss out. They hear stories about their neighbor making money in the market and they think, why not me? So they jump in without thinking, without planning, without understanding what they're doing. And that's exactly when they're most vulnerable. Because the market doesn't care about your feelings. The market doesn't care that you just bought in. When it's ready to go down, it goes down. And all those late arrivals, they get crushed. This is why discipline is everything. You need rules, you need a strategy, and you need to stick to it even when it's uncomfortable. My rule is simple. I don't buy expensive stocks. I don't care how good the story is. I don't care how much momentum they have. If the valuation doesn't make sense, I don't buy. Period. That discipline has saved me more money than any hot tip or inside information ever could, because it keeps me from doing stupid things. So what's my advice to you right now? Here it is. Stop buying. Just stop, take a break, sit on the sidelines and wait for better prices. I know that's not what you want to hear. I know you want me to give you the next big stock pick, the secret to making a fortune. But that's not how you build wealth. You build wealth by not losing money. You build wealth by being patient. You build wealth by waiting for the market to give you opportunities instead of forcing trades when there aren't any good ones. And believe me, opportunities will come. They always do. Markets are cyclical. We go from boom to bust and back again. Right now, we're at the end of a boom cycle. The bust is coming. And when it comes, when stocks are down 30, 40, 50% from their highs, when everyone else is panicking and selling, that's when you want to be buying. That's when fortunes are made. But you can't take advantage of that opportunity if you've already lost half your money buying overpriced stocks today. This is the lesson that separates the professionals from the amateurs. The amateurs think the goal is to always be in the market, to always be doing something. The professionals understand that sometimes the best move is to do nothing, to wait, to preserve capital, to be ready for when the real opportunities show up.